Mhm. Good morning, good morning, good morning, folks. This is Naima. I'm Chief Market Analyst at Trade, and welcome to our daily update. I come with a wealth of over 15 years of experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with now, as always, bit of a housekeeping, folks. Anything which will be discussed in this video cannot be perceived as an advice. Of course, if you are seeking for one, please do consider consulting with your own financial advisors. And if you like the content, if you like what we talk about, feel free to smash that like button. Now, as always, what we're really going to discuss in this video will be number one, of course, happening in the stock market. Number two, we'll be discussing, okay, what is happening in the commodity market, and then we'll be shifting towards cryptos because I think something really important is about to happen in the crypto market as well, which we all need to be mindful of. All right. So what is happening in the European stock market is the bargain hunters have very much started to pile in. Why is that? Well, yesterday the stock 600, which is one of the major stock index in Europe, had its worst one-day drop since December last year. So obviously, whenever we see such a steep and deep loss in the stock market, the following day the momentum usually sort of shifts, and then that is what we have seen over here as well. I know the video is running a bit slow. I don't know why. If you guys have any suggestions of using any other streaming software, please do help me with that, and put the options in the comments so that we can really improve, because I think the YouTube, its own software, is not really great in terms of its streaming, and I'm really exploring other options. Now, again, going back to the to the stock market, I am seeing the DAX, the Stock 600, the CAC, the FTSE MIB, and of course the UK FTSE 100. All of these indices are very much trading in the positive direction. In other words, we have a risk on day today as compared to yesterday, which was a risk off day. What is a risk on day? Risk on day is when traders back equities, when they buy stocks, and when they buy indices, and when they wanted to push the markets higher. That is called risk on day. And risk off day is completely the opposite of that one, meaning when investors do not like taking risk, they don't like to buy more stocks, they like to stay either on the sidelines, or they try to sell with their positions what they have. Now, on a day like today, what we should be really doing is, okay, either start selling some of the positions or holding on to our positions, because we certainly don't want it to buy on a green day. But of course, for to follow momentum and they're very much a day traders, then the rules are very, very different. But for traders who like to have a long-term positions, their rules are that, yeah, okay, buy on the red day and then sell on the green day. So that is what they really kind of wanted to do. Now, as for the US futures, I am also seeing positive momentum over there as well. And the chances are that to keep an eye of the S&P 500 and the NASDAQ and, of course, the Dow Jones on the 4-hour time frame, because all of them are trading below their 50-day simple moving average. So the trade really is the moment the price crosses above the 50-day simple moving average, you can have your stop losses below the lows of today and let this particular trade continue to move to the upside. Of course, if that doesn't really happen, then we should be really looking at buying somewhere near the 100-day simple moving average. And we will do a separate video in relation to those technicals, so don't really worry about that. In terms of our fundamentals, and especially about earnings, it is all about Netflix, because remember yesterday, Netflix came out with its earnings. It added 1 million paid subscriber. Overall, there were 4 million subscribers, but this number isn't really that great if we compare what they did last year. But obviously, the situation is not the same what happened last year, because what happened last year was everyone was sitting inside, everyone was subscribing to Netflix. But that doesn't really mean that we should be going away from Netflix stock. The reason for that is as follows. Number one is Netflix. First of all, the Netflix stock dropped in the after hour markets yesterday by over 13%. And today we are also seeing more retracement. Now, the reason that I like Netflix stock, and then I don't really mean that you go and then start buying that today. I mean, you shouldn't be doing that anyway because this video is purely for information purposes only. And I'm not aware of your risk parameters, so you shouldn't be really taking that even close enough to any sort of advice because this is not a channel and I'm not a financial advisor who can really guide you without knowing your risk profiles. So, but having said all of that, what we could see in terms of Netflix is that yes, the pandemic brought a lot of users in, but at the same time, Netflix wasn't able to produce now because of coronavirus vaccine and all of those things is enough. We are gonna see that content coming back on. And if the catalog becomes more stronger for Netflix, which is likely to happen, we are going to see, better quarterly numbers going into the next. And more importantly, speaking from as an investor for Netflix, you see that these prices have gone up. So that means the margins have become a lot more better for Netflix. And that is another reason that I kind of like Netflix, but maybe I'll wait for Netflix to fall a bit more from its current levels before I really get engaged into that. Now, moving away from Netflix and then going into the Super Bowl, because it is about Super League, shall we say, it is all about, yeah, okay, all the six English clubs have certainly pulled out of the Super League. And what we're really seeing is a massive sell off in terms of a Manchester United, in terms of a Juventus and other football clubs. Now, all the six English clubs which signed up for the Super League, they have collectively retreated or pulled back from that Super League. Now, of course, that means that we are likely to see some really strict measures, sanctions, or other penalties coming as well, because they really try to do smaller clubs. And now we are likely to see some more reaction in that. But as of yesterday, as of today, we are seeing Manchester United and Juventus, both of their shares under immense amount of pressure. Now, shifting the gears and going into commodity markets. In the commodity, we are seeing oil prices still trading to the downside. We do have a crude oil inventory data later on today. Remember, it was a crude oil inventory data last week, which really helped us to propel the prices to the upside. We could see that if we continue to see that, yes, supply isn't really building up. So far, the concerns with respect to oil prices and the reason why they are moving to the downside is mainly because of demand concerns, because India has become officially the second worst country in terms of coronavirus. The government hasn't performed well at all. People are certainly suffering over there, and that is having an impact on demand, on oil demand. So that is something we've got to keep in mind, keep in our mind, and that is influencing oil prices now. Now, of course, guys, if you like the content, please feel free to smash that like button because it helps us in Google's algorithm, and click that notification bell as well if you wanted to know the moment that we go live. Now, moving away from this one and going to the crypto market, among the top three, I wouldn't say the top three because XRP is no longer the top three coin now, but among the three popular coins, shall we say, which is your XRP, Ethereum, and then your Bitcoin. Ethereum is certainly the strongest one with a lot of momentum behind it still. And I still believe that if it breaks above its 50-day simple moving average on the 4-hour time frame, we are likely to go all the way back towards the 2,500 price level. Now, XRP, I'm not seeing any momentum. With respect to Bitcoin, I'm very much concerned given the fact that on the daily time frame, the price is very much failing to break above the 50-day simple moving average. Once again, guys, this is not an advice. And if you like the content, please feel free to help us and keep smashing that like button. And moreover, if you have any questions, put them right here while I am live sitting in front of you, because this is your opportunity to ask me any questions that you may have in relation to your trading. So once again, about cryptos, Ethereum has a lot of momentum behind it. It is the strongest one. Bitcoin is the second one. We don't really see much momentum coming there. And XRP is the one with the least amount of momentum behind it. All right, that's all for now today. And I'll see you guys same place tomorrow.